We're coming to you from our new offices with BB&T Scott and Stringfellow. If you have not yet visited us here in the Gulch or in Cool Springs at the BB&T branch in the Meridian, we hope to see you soon. It's beginning to feel like home, and it's beginning to look like home as well. Of course, there's much more happening in the world to talk about, and in the next few moments, I'd like to bring you up to date on what we're following and thinking about on behalf of our clients. First, the themes we've been following this year. The U.S. tax overhauls and public spending fueled growth in earnings. That continues, and here are a few examples for you. GDP in the third quarter grew at an annual rate of 3.5%, down a bit from the second quarter and still sharply up from the first quarter of the year. With nearly half of the S&P 500 index companies having reported third quarter earnings results, the numbers overall have been excellent. According to Thomson Reuters, 78% of companies have exceeded consensus earning estimates, putting the index on track for a nice increase over this time last year. And when we take a look inside the Federal Reserve's Beige Book, released last week, and third quarter GDP both confirm the U.S. economy is on solid footing. And as expected, the Fed has raised interest rates 3 times this year. At the same time, market volatility has returned, as I know many of you have noticed. While September saw market highs, in October we've seen the S&P index decline by more than 8% from those highs, enough to feel uncomfortable. And even though historically October is one of the most volatile months, we wonder, so why in the midst of positive news do we see this pullback? I believe we can find the answer in 2 places. First, it's normal to have market pullbacks of this amount, and in fact of double-digit proportions, even in a healthy market. We don't have to look too far back to find 2 double-digit back-to-back market pullbacks. That happened in December 2015 through February 2016 timeframe. And then, in short order, our financial markets came back with great strength. Second, we have a good bit of uncertainty right now. You know these because you hear about them every day. U.S.-China trade dispute, Italy's deficit spending, Brexit uncertainty, Saudi tensions, and front and center is policy uncertainty ahead of the midterm elections. A lengthy list, and one that will become shorter in the days and weeks ahead. Our midterm elections will be settled soon, removing one of the biggest unknowns. In the meantime, we continue to focus on fundamentals, which are positive. We also take a look at history to help gain perspective. As I mentioned, October is historically one of the most volatile months. During midterm election years, the S&P 500 has gained from the October lows until the end of the year every single year since World War II. That is 18 out of 18 years. Our best path forward is to continue to follow our process and focus on the fundamentals. To that end, we recently met with our portfolio construction team at BlackRock, as we do each quarter, to help us better understand risk and positioning on an ongoing basis. A few themes that you will continue to hear us talk about. We believe technology merits a strategic place in our portfolios, and mindful of interest rate increases, we're focusing on shorter-term fixed income durations. We're also decreasing our allocation to emerging markets, believing the continued uncertainty of trade conflicts will add volatility to this asset class. Remember, our portfolios are strategically allocated to remain invested through times of both low and high volatility. Our goal is to participate as opportunities develop while continuing to keep risk in check and appropriate based on your individual risk tolerance and goals. Always remember, your personal planning is the cornerstone and most fundamental basic that will help our clients make progress toward their goals. Please let us know what questions you may have and how we can help. We've included our new phone numbers for quick and easy reference. Thank you for taking time to listen today.